Did you know that most investors feel concerned when the shares they own are trading at a lower price? This is the reason why famous investor Cathie Wood and her firm Ark Invest have been buying stock during the drop. Wood appears to offer a distinct perspective, so you definitely wouldn't want to miss this. Cathie Wood's trading has undoubtedly been opportune in that she has repurchased shares when the market declined and liquidated some after it around the middle of October. Rose higher. Wood added 66,190 Tesla shares to the more than 132,000 she had already purchased that month. Following Tesla's announcement in a news release about its production numbers and the missing deliveries, ARK made its first purchase of the month of October. Wood's most recent purchase was made after the market declined in response to Tesla's Q3 earnings. Wood's ARK invested heavily in Tesla shares through its innovation next-generation internet, autonomous technology, and robots exchange-traded funds, ETFs, a few days ago. The company's three funds recognized an opportunity to purchase the automaker's recent decline on Wall Street, and in the second week of November, the Innovation ETF purchased 27,594 shares, while the Next Gen Internet, Autonomous Technology, and Robots ETFs acquired 2,909 shares and 9,173 shares, respectively, receiving an additional $10 in cash. Register an account and make a deposit on Moomoo to take advantage of this time-limited offer in honor of Moomoo's 10th anniversary. Take a look at the following link. Moomoo is an excellent stock trading platform with a variety of innovative, user-friendly capabilities. I believe many of you will find it really beneficial, particularly if you wish to be more actively involved in your investments by, for example, learning when to purchase and sell stocks. There are several likely reasons for Wood to keep buying up shares during the dip. Well, for one, Tesla has had incredible growth over the years. EV maker. Both new and old investors share the same goal of taking full advantage of the stock market and investing with confidence. Growth investors build their portfolios around companies that are financially strong and have a bright future, in the same way that Amazon altered the retail landscape and Netflix revolutionized entertainment. Tesla has developed into a dynamic technological innovator that has revolutionized the EV market. With a market share of almost 70%, Tesla leads the market in battery-powered electric vehicle sales in the US. The company's flagship Model 3, the Model 3, is the most popular EV model in the country. With its market valuation of over $1 billion, Tesla, which has managed to establish a reputation as a gold standard throughout the years, is currently a far larger company than it was at the time of its 2010 IPO. In October 2021, the market capitalization of EV Kings crossed the $1 trillion threshold for the first time, surpassing the combined value of legacy manufacturers including as Ford, Toyota, Volkswagen, Daimler, and General Motors. With a growth style score of A and a VAM score of A, Tesla is a Zacks Rank 3 holding stock. For the current fiscal year, earnings are predicted to climb 79.2% year over year, with sales growth of 54.2%. In the past 60 days, 8 analysts have raised their earnings estimates for the fiscal year 2022. 6 cents per share was the consensus estimate for Zacks, but it is now $4.05. Tesla has historically had an average profit surprise of 26.4%. Tesla has had a 95.7% increase in cash flow and is predicted to report a 177% increase this year. Experts think that due to its outstanding growth characteristics, investors should consider shortlisting Tesla stock. Excellent Zacks scores for VAM style, good growth, and rank despite price increases. Tesla also touts high demand for its vehicles. Despite the company's increased expenses, Tesla has been hiking pricing, but this hasn't seemed to diminish demand for its electric vehicles. Elon Musk's electric vehicle company saw a $3.3 billion increase in income. Deliveries increased by 68% in the first 3 months of the year due to customers' willingness to pay more, and they would have increased much more if supply chain constraints hadn't occurred. According to the company, COVID deregulations recently forced the closure of its Shanghai factory. Others are claiming that demand is declining, but it seems there's more to it than that in recent weeks. Tesla recently saw a sharp decrease in the wait periods for delivery on new orders on some of its electric vehicle models, due to Tesla's direct sale business model, which places the company in charge of its vehicles until they are in the hands of customers. The company is responsible for its vehicles until they are in their possession. As a result, it is up to Tesla to keep inventory low and match production to orders depending on the demand for certain models and production capacity. Watchers have noticed that Tesla's delivery wait times have significantly decreased. Some models that Tesla was quoting up to 6 months for delivery just recently are now listed as available in weeks. Sources told Electrek that Tesla is not experiencing any demand issues this week. Wall Street analyst Pierre Ferragu of New Street Research, who covers Tesla, sent a note to clients cautioning them not to read a sudden drop in wait times too quickly, even though orders are steadily increasing. Despite this, irregular increases in production capacity mean that wait times will remain volatile. Orders appear to be reaccelerating this quarter, despite a decline in indicated wait times, according to our data. Another reason that Wood will continue to purchase Tesla stock throughout the downturn is that the company's efforts to boost battery output will benefit the business and, consequently, its stock price. Panasonic, a Japanese media company, plans to boost EV battery production for Tesla by 10%, according to an August report from Nikkei. By 2024, Panasonic Holdings wants to increase output of the batteries it provides to Tesla by roughly 10%. While Panasonic already produces batteries for Tesla at its factory in Osaka, where it employs a large number of engineers, the Japanese company announced in July that it would also build its second EV battery plant in Kansas. The factory is not expected to open until 2024 at the latest. Panasonic intends to increase the production efficiency of its U.S. plants to the level of our domestic factories by transferring know-how SAD and executive. Additionally, it was revealed in mid-September that Tesla is evaluating the viability of constructing a battery-grade lithium hydroxide refining facility on Texas Gulf Coast to support its production of electric vehicle batteries. According to a letter to the Texas Comptroller's Office, the automaker stated that it is looking to construct the facility, which it touted as the first of its kind in North America to process raw ore material into a usable state for battery production. As reported by according to Bloomberg News, innovative technologies will be used at Tesla's new factory to produce usable byproducts and utilize fewer toxic reagents than the traditional method. As automakers attempt to secure the supply of lithium, prices of which have escalated this year owing to various factors, Tesla may become the first in the auto industry to make a direct investment in lithium refining. Increasing demand in the industry currently at its Gigafactory in Nevada, which it shares with Panasonic, Tesla produces batteries for its electric vehicles and energy storage devices. The company also aims to build batteries at its new Gigafactory in Texas, which is situated just outside of Austin city limits. A Nikkei post from early November states that the EV company's profitability is another compelling factor for investors like Wood to invest in Tesla. Despite being outsold more than 7-1, according to a Nikkei analysis, Tesla made 8 times as much profit per vehicle as Toyota Motor in the July-September quarter, surpassing the American electric vehicle manufacturer in quarterly net profit for the first time since coming public in 2010. In that quarter, Tesla announced a net profit of $3.29 billion. Using an average exchange rate of 138 yen to the dollar over the period, Toyota made 432.2 billion yen, or $3.15 billion. The market leader in electric vehicles reported revenue of $21.5 billion, up from $13.8 billion in his signature promotional style. The company made $3.3 billion in the third quarter, up from $1.6 billion in the same period last year, and almost matching the record profit it reported in the first 3 months of the year. Elon Musk, the CEO of Tesla, said that his company may overtake Apple and Saudi Aramco to become the most valuable in the world. For more content on Tesla stocks, please subscribe to our channel.